Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, October 7th, 2019. Figured it'd be a good time to get this one out. Seen some interesting developments worth noting today so far. We have the downtrend line on QQQ. All morning we flirted with that downtrend line. Remember, we closed there on Friday, and you can see this morning here we pulled back from it, had a little reaction there, came up, traded under it pretty much the entire day. This I just zoomed into 1 minute chart is what I'm doing here, or 2 minute chart, and then finally took it out, and somewhat impulsively too. However, there is, as I pointed out last week, there's that 189.40, pretty much the top of the trading zone from August is just above it. So this is what I often refer to as you have benefit of the doubt. You have two resistance levels. So undoubtedly traders jumped in once that trend line was taken out and bought the Qs or NQ. I'm going to get to in a second, but you still could get checked here at that top of that very significant August trading range, and so that is has a potential to prove to be a false signal, a whipsaw signal, aka bear trap, bull trap, I should say. Now, of course, if they take it above there by much, if we clearly get above there, especially excuse me, especially a 60-minute candlestick close, then that's going to be bullish. That I don't see a lot of resistance up here at about 190.50, and again, that would be just a pretty good move for the bulls. But I'm still leaning towards the reversal. Like I said, we have this move so far. Did this last week. You measure this move, and that seems to be about where each of these previous rallies before have stopped. You get near-term oversold, near-term overbought. It's not to say that it can't go up anymore from there. It's just been about the limit recently. I guess that's where most of the stops get run. Most of the bulls start to come in at that. They think it's safe to get back in, and then you get the reversal. The trade gets too one-sided. Too many longs, too many shorts, and that's when things tend to reverse. So that's it. I just wanted to point out, watch that 189.40, which was right about the time I started the video about the highs, pulling back a little bit right now. And let's look at some other levels. Oh, the other thing to note, the PPO on QQQ, the 60-minute PPO, the signal line, the white dotted line, is just right about on, just a hair above the zero line. And again, the last time it crossed, it went bullish here, stayed bullish up to that point, crossed back down here, and it's been on at least this one trend indicator has been on a sell signal throughout that time. And quite often when you come up and backtest the zero line, you get rejected. So there are periods when you're in a choppy trading range when you start to get these whipsaw signals, but it does a good job of catching a lot of the trends, saying bullish, 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 and flipped to bearish there, shortly after the drop started. And then this is where we got caught in that trading range. And again, this is where these trend indicators don't work so well. Only time will tell if this is going to prove to be, another trading range that we go in. I doubt that, but anything's possible. All I can tell you is resistance until unless taken out, and so that's what we have right now. We have a breakout that some eyes see, and then a rally into resistance that other eyes, like mine, might see, and we'll see if others step in there and sell. So that's QQQ for now. Let's look at SPY. SPY, remember, had that big 294 level, and we poked above it. We had a momentum fueled overshoot. It was a trend day on Friday, so you had straight, almost not a vertical, but a pretty steady uptrend. So you overshot it a little bit. And remember, SPY is a nearly 300 point index. So that means we overshot it by think about 60 cents or so, which is 0.2%. That's how much that little pop above there was. So that's statistically insignificant. You got to give a little bit of room up and to and through. So in other words, you don't go across 294 and print 294.01 and boom, you have a breakout. It's not that simple. You want to see a convincing impulsive move above that level, and then there's this. This is only a potential downtrend line. As I mentioned on Friday, it hasn't yet had a third reaction off it. And if you look at the 60-minute the PPO down here, it has been bearish since that signal line, the 9 EMA cross down right here, and it's back testing right now. We're still below there. And again, I use that zero line because that's the last of the two to cross. It's not a perfect indicator, but it helps to filter out whipsaws because it's the slower of the two lines. So you'll the blue line, the PPO line will cross first, then comes the signal line. So here was this was the strongest uptrend in the last couple months right here, and from here to here it said be long, or it said trend is up, and so right now it's still there at bearish, and we're still in close enough proximity that 294 we could have a rejection there. All right, so let's look at the futures, then we'll wrap this one up, keep it relatively short. All right, this is the here's that downtrend line. We zoom in real tight, and let's do that. Let's zoom in a little tighter here. You can see there's the downtrend line. You know what, I have a second board here. We'll do this one here. Zoom in and show you that downtrend line on NQ. All right, NQ are the NASDAQ 100 futures. Again, you can trade the micro E-minis, which are MNQ. You put an M in front, and then you don't have as big a leverage factor, but trades on the same values here, the same chart. You can use this chart trading the MNQ. So you have reaction 1, reaction 2 right there, and I just caught the highs. That other board, I have it coming in because there's two candlesticks here if you look closely, the red and the green, and so the top of that green candle right there, there's a wick, and so that's where we come in here. So right now we have a brief intra-period overshoot, and I'll zoom in a little tighter so you can see what I'm talking about. This is a 60-minute chart, so the most important thing is how do these 60-minute candles close. Right now this is the candle we're working on, and you can see that we popped above that trend line, but so far we're right back down on it. So not yet a breakout, or at least not a confirmed breakout. You'll want to see a solid 60-minute close above it, and maybe that happens before I even finish the video, or well, that candle won't be finalized yet. But and then also to note, two other things to note on this 60-minute chart. Number one, this blue line right here, horizontal line, it's 77.92. Well, that's roughly the top of the August trading range on the NQ futures right here. So lots of reactions on that level. Once we broke it, we back tested from above, and so it's certainly a support level worth watching. Now we did get a little sloppy here, kind of traded through it a few times, which somewhat works to invalidate. It doesn't completely invalidate that level because there were so many reactions in the past, but it's not as important as it was back then, but still a level to note. And it aligns with that level I just showed you on QQQ. Same thing, it's top of the trading range there. So those are levels to watch. You have downtrend line resistance, which we've yet to take out, especially not impulsively nor on a 60-minute close, and then price resistance right above that. So this is still my preferred scenario right now. I know it's not looking like that, and maybe that doesn't happen, but I call the site right side of the chart. I try to predict what's going to happen to the right of the chart. Right now I have a zoom in here. If you take away that, the margin, there's the, this chart ends, prices end at the right edge of the chart. So anything here is the future. And hey, don't always get it right, but I'll tell you where I think things are going. And here's the thing. So if you are short, or you short here, because I can tell you it's objective to short here. I can't promise you it plays out. You have a stop somewhat above, and we break out, and especially if it's impulsive, especially if you get a 60-minute candle or even two candlestick closes above, that's bullish. However, we haven't yet had the sell signals. Remember this morning I posted these this uptrend line, or both of these actually, on ES and NQ. So what's happened is we're still above the these near-term trend lines. I have more reactions, more candlestick bodies right here, and a couple reactions. There's that one brief spike on the ISM services number on Thursday, snap right above it. So this is the trend line that I'm watching, and so we're at a confluence of well, support and resistance, the intersecting levels. So bulls want this, and anything impulsive above that level will be bullish, and bears want to see failure here, break of this trend line. And you know what, I need a color code because this is probably the big number too, is 77.22. We'll call it 77.20. Let me just make that this blue color. I'm trying to color code these, with the salient levels to watch, more important levels to watch there. So that's it. So you can see there's been a cluster of support so far recently since Friday. right here. We had one little spike below, but multiple. I mean, you can count them if you really, you'd have to zoom in. That's got to be well over a dozen candles easily. And all of those candles right there, you can see them bouncing on that 77.20. So call it, well, 77.22. So we'll call it 77.20 to be safe. Any break there should open the door to more selling, whereas a impulsive break and or especially close up above that 77.92-ish level would be bullish. That could open the door to new upside. One thing to note too, if you do get a breakout to the upside, well, first of all, this trend line will continue to be valid, the uptrend line here. So keep watching that. This market has been whippy. I had done trading a great job myself, and posts I was making calling this thing down. This one got me. I was looking for a reversal, but I was looking for more downside, about another, it was less than 1% from where we reversed. I was looking for 0.9% more downside, and then as I said that morning, I was going to reverse and go long there. So we popped down on the ISM services, but they stepped in early, and that caught me off guard. And that was a divergent low, not the cleanest divergence there, but where I'm going with this now is watch this trend line. Even if we break to the upside, this uptrend line may still come into play. It's not the most well-defined trend line, but if we have any more other reactions on it, you want to watch that. So one scenario, if they broke out there and then reversed, maybe came in for a back test, you want to watch that. That might be an objective long entry, but of course, should it break, especially both things here, this trend line, we haven't broken above this trend line yet, but if we break out, come back in and then fail, that would be a failed breakout, false breakout. Quite bearish if it happens. Otherwise, bullish scenario would be a couple things here. Break above those levels, we keep going. Breakout, back test, and anything like that. So I'll keep it, the risk of oversimplifying it. This is bullish zone. Down here is bearish zone for today and into this week. And most importantly, I'd like to see how these weekly candles, how the week shapes up. We're going to have, I looked at the economic calendar, and I think every day for the next 3 days, today, tomorrow, and Wednesday, Powell speaks somewhere at some conference. So, there's always the potential to move the market there. They hang on his every words. But I wanted to get these levels out to you guys and watch what happens here. Like I said, I'm leaning towards that rejection, and if so, sell signal 1 on a break of the trend line, but you really want to see 77.20 go to seal the deal on a reversal here. And on ES, and did I mention, hold on, I think I did I just mention? If not, let me make sure. We have negative divergence forming right now on the 60-minute chart. You know me, that's a big part of my trading right here. I look for these divergent highs, divergent lows. It is what I call unconfirmed divergence because the PPO is just turned up and it's pointing higher. The fast line there, that white line. So what I need to see is a turn back down and then effectively put in a lower low on this indicator, lower low on the RSI with a higher low. So we have this what I call potential but unconfirmed negative divergence right now, and that would play out well for the reversal scenario, and we'll see. It could be the start of the next leg down, or it could be just the start of a pullback. But with 60-minute divergence, I would say this. I'll keep it very simple. I know everyone trades different styles, swing trading, active trading. If you want to take a day trade shot, if we broke down here below the trend line and or that 77.20-ish level, and you're at, let's say, a semi-active swing trader or even a day trader, might be prudent to just let a short go and trail down your stop. As the position runs, gets profitable, you lower your stop to entry to at least assure a break even. If it continues down every so often, I like to periodically manually ratchet my stops down. I have the time to do that being in front of the computer all day. If not, your broker will let you set a trailing stop loss order. You have to put in either a percentage term or numerical value. Just know this: if you do it too tight in a choppy market like this, they're going to stop you out in the back and forth noise. So you have to give it a little bit of room there if that is your plan, again, to trail it down. Okay, and then finally ES. I think I if I didn't get to SPY, I'll get to that in a second. I'm bouncing around different time for mostly looking at the 60-minute time frames right here. That's what I'm back to right now because we're on Monday. I'm not going to talk about the weekly candles right now. There's no point, especially because we haven't gone anywhere today. Market's almost flat, and SPY is down 0.2% as I do this. But the levels on ES, remember, I was using the bottom of this candle here, come in, and there's reaction number 2, and this is what we've been dancing on all day. So we haven't had yet. We had a couple intra-period pops, but no breaks below that level yet. So both of these uptrend lines that were highlighted this morning in the pre-market session have held. They've contained all the pullbacks. So that would be sell signal 1, but really you want to see, this is comparable to that, what was it, 77.82, I believe, level on NQ I just showed you. It's 29.35. That's the recent cluster of candles there, other than, excluding this one brief spike. So that's the level to watch on ES, 29.35. And as always, whether you're trading ES or NQ, you want to see both those levels go. That would increase the odds that you're not going to have a whipsaw signal if both 29.35 on ES and 77.22 it was. Okay, sorry about that. Got that one wrong. And let's just jump back to ES and highlight as well the potential. We've made roughly an equal high right there in prices. Marginal new high would give us that to confirm, or would give us negative divergence right now. We have almost divergence there. So maybe another thrust up here in ES, a little more upside. Here's that downtrend line off the highs back in when was that? Let's see, that was the high on September 19th right there. Remember, that was a downtrend line that was in play. We had a false breakout here in this wedge pattern set up, and that is what triggered. That was a technical catalyst right here, this wedge. And then we had this trend line with a failed breakout, and once, as I often say, fewer things are more bearish than a failed breakout, and that's kind of what happened down here. We had the flag breakdown, everything. It looked good, looked good for more downside, and it didn't play out, and so therefore they caught a lot of traders, me included, short on that one, and then they reversed it. And so, as I say, fewer things in trading are more bearish than a failed long side or bullish breakout, and likewise fewer things are more bullish than a failed bearish chart pattern breakdown. And but either way, we've already had the 4% or so plus reversal, at least in NQ. So at this point in time, I think that's safe to say that that's probably squeezed out about as much of the shorts that were in there at that point in time. So the market should reach that equilibrium point now, and if there's just a lot more buyers on the sidelines than sellers at this point, it's going to break out and run higher. If there are more sellers waiting in the shadows right now, longs that want to get out, shorts that want to get in, then we'll break down here and we'll go down. To me, it's, again, at the risk of saying, I don't want to say it's that simple, but that's the way I look at it. So those are the levels I'm watching right there. All right, let's wrap it up here. I'll get it out to you guys, and we'll see how things play out today. This has been Randy Finney with Right Side of the Chart. Best of luck on your trades.